What's going on, YouTube? Welcome back to the channel. My name is Big Ben. I'm your host, and I'm here to talk to you today about actual pullback opportunities that I'll be watching for the rest of the week, and I think you should too. Okay, so as you can see, the first stock is on the screen. It's Chewy, ticker CHWY. All right, so Chewy has already pulled back to the 21 EMA. And what I'm looking for here is this is a great company, and I'm thinking long term. So, me trading this stock ticker, I either buy shares or more than likely to save some capital, I'll go ahead and I'll probably buy a Leap. But for this week, or probably for next week, I may end up buying some puts here at the 92 or 91 strike, or I'll probably come out maybe 3 weeks to a month and sell the 83 strikes. Okay, so let's go ahead and look at the option chain. All right, so let's see what Chewy's at. Chewy right now is at 97.15. All right, so if I want to come out here and sell a lead, which the contract would be longer than a year, I'll come here to the January 21st, 2022, which is 375 days away. Let's see, click on that. And looking here at my strikes, I usually like to grab the 70 deltas, but it's whatever you're comfortable with. I think I actually may grab between the 80 and the 85 strike. So I may end up picking it up tomorrow. But that's one trade idea you can do as far as like a leap. Or you can come here if you want. If you anticipate short gains for Chewy within a month or so, you can come here, and it's not cheap, but you may come here and buy like a 93 or 94 strike call. Okay. So my plan is see how much premium we get. So 92 and a half. So every time I sell a put, I'm trying to make at least $1 and up. Okay. So 92.5. Let's see what we are on the chart here. Bigger. Okay, 97. So 92 and a half. Yeah, so it's right here. So this is more of a aggressive trade. Usually I put like 2 or 3 of these on, so I can make like about $200-300 before the week is out. But I recommend if you decide to take a put in Chewy to go out 2 weeks to a month. Okay, let's see what the next week premiums are giving, which is much better. See, we go a little bit further down now, and we can sell the 88 strike price for $1.05. And that same strike price, 92 and a half, is $2. Okay, so usually, or sometimes from here, I don't mind selling 2 contracts, collecting $2.02, which will be $4.04 in premium total. And I don't mind rolling this if the stock was to pull back on me and go down to maybe 90 or 89. Okay, so if this stock pulls back tomorrow, or if it just consolidates here, like I said, I'm gonna buy my leap now here, or sell a put here and sell a put in this area right here. This buy zone between 80 and 92. Okay, so that's what I'm actually looking forward to, probably making like $300 off this trade for the week. Okay, and that's trade one. Let's go to the second one. Now, my second stock is SQ. All right, SQ experienced a nice pullback, very strong company. Everybody loves it. So I'm hoping, because I don't know, that tomorrow when the market opens, this stock stays here and consolidate. Now, there's a possibility that the stock could pull back a bit more down to the 50, depending on who's selling the shares or if the market does a bit of a pullback. Okay, so same strategy with this, but with SQ, since the price, I always look at the price because the price is a bit bigger to me. So A stock like SQ, as you can see, today it moved down $15.95. It has no problem tomorrow doing the exact same thing. Okay, so this has no problem coming down from 225 all the way down here to maybe $210. So what I usually do if I play a put in this ticker is I'll come down here to 208 or a whole number about 210. Okay, or I'll sell a little bit beneath it around 205 or 200 just to assure that everyone likes that round whole number of 200. So we have a pretty good chance of holding if this was to drop below the 50, which is here, 50 EMA down to the 200. Okay, so more likely we will probably hold and hopefully consolidate whether down here or up here and then make our bullish run or continuation, especially with earnings coming up. 223, so February 23rd. So this will be a nice run to earnings play. My trade ideas are I will probably pick up 10 to 20 shares here, or buy a call that expires the week of the 23rd, or sell a put 2 weeks out so I can get the premium down here. So, matter of fact, let me show you what that looks like. So let's say if I want to sell a 210 put, I want at least maybe $2. It's a bit more volatile, so we'll see what we get. All right, finally got a ticket to load. So what I was looking at was the 210 put strike price. Okay, so 210 has a probability of 75.70 cent out of the money, 75.70%, excuse me, out of the money. So basically 75%. So this is something I will put on usually if I'm looking to play a put as volatile as SQ. Okay, or for those of you that know about credit spreads or bull put spreads, do 210 sell vertical spread. Come here, see what one looks like. Okay, so if you do a five strike wide credit spread, you bring in 55 cents per contract, risking $195. Okay, so usually like to play with these numbers to see if I can get a bit more of a credit. There we go. Oh, excuse me, sorry. The last was 2.5 strikes wide, and this one is 5 strike wide because we, 210 minus 205 is 5. So that's where we got 5 strikes from. We get a credit of $1.02, which gives us risk of about $3.98. Okay, so we punch this in here, confirm send, kind of see what information comes up, and there it is. The max profit you can make is $1 or $102 even, and the max loss will be $398. Okay, this is how we control our risk if you don't have the funding to play a put spread in the market. You can go ahead and put on a credit spread. Okay, so I'll make a video hopefully this weekend explaining what credit spreads is, how the best strategies you can use to put on credit spreads, or when to put on the credit spread. All right, so there it is. But more than likely, I'll be playing a naked put here at the 210. All right, and at the 210, that'll put me right here for next week, which is, to me, is not really aggressive play. It's conservative because I'm here on the 50, next leg down. And I will say, once again, if this pulls back past the 50, then I'll go ahead and just roll it when the expiration week next week comes, and if the stock has gone past my strike price. Okay, all right. Stock number 3 is NIO. Correction, NIO is not a pullback stock. NIO is actually broken out. This stock right here is ran its course for the time being, which it still may have continuation. It shouldn't be on the list. Sorry about that. Erase NIO. Next up is the Trade Desk. Very popular company. Has since March last year. Wow. Have 8-9x, as people like to call it. But very popular stock, very powerful stock. So what I'm looking at here is when I have a stock that's almost $1,000, which the stock is $779.29. Now, you'll be amazed at what buying 5 shares of this particular stock can do for you. Okay, so we're under the 50. It's a little bit bearish, but this can easily break out over the 50 and continue its bullish run. All right. So a stock like this, if I wanted to buy it or purchase it, what I would do is buy 5 shares here and wait for a pullback some more. Maybe 5 shares here. We got all the way down to the 200. 5 shares here, averaging in. Okay. Now, if you have the money, you can come here. All right. So for a stock like this, wow. So pulling up the leaps here. Wow. So 375 days. If anybody has the money out there, man, wow, $221, which is $22,100 and $23,100. So I do have the cash, but I wouldn't buy no leap in this company. It's just doing the most. If anything, I would sell a put. I wouldn't even not sell a put, sell a credit spread, because if I want to play it, see, with these puts, man, expensive. So a little key thing you can do if you want to look at how much, so say for instance, TD Ameritrade, you need $6,000 or more to sell naked puts in your account on margin. Okay, so if this account doesn't have over $6,000, only has $55.46. But what you can do here is just click on bid and then hold on to control on your keyboard. Just click on one of the other opposite on the call side. So click on one call, one put, okay? And then just make this one. And then you come here to confirm the send, and you get a ballpark of what the buying power effect will be. So if you want to put on this put at $762.5 or $762.05 strike price, then this is the buying power effect, $13,850.20. So which that's just too much. That's way too much. Yeah, and this is actually a strangle, but you would just look at the price or the put that you want to sell, which is in between here, which would be about maybe $2,200 you can receive, for $13,800 a margin. No, that's not a deal to me. All right. But anyways, you can come here, and maybe if you want to sell around the 760, you can come here and sell a credit spread. All right. Come here, one. See what the difference is, 2.5 strikes. So $75, risking $175. This is how you can play these big stocks. Okay. Credit spreads is the key. Come here again. So max profit, $175, and max loss is $325 of risk. Okay. So it's five wide strike at 760, 755. See here, 760. Where are you? 760 is right here, which is aggressive. Okay. So if I want to play credit spread here, I will come down here to the 700 strike even. Okay, around the 700, make it 5 points wide, and then just go from there and just hope that we have consolidation, and breakout. But usually when a big stock like this pulls back, I usually do 30 to 45 days to give me enough time, because this can easily come down here and consolidate down here and then break out and then continue upward. Or if this is a downtrend, it'll stay here and keep downtrending until something breaks it up. So usually downtrends happen if there's a change in the fundamentals or an analyst downplays it, overweight, and all that other stuff. Okay. All right. Next stock. Next stock is Zoom. I have the 10 shares I'm still holding in this stock, with being very optimistic about the stock hitting here hitting down here on my 200 EMA, hitting down here on the 200 EMA, possibly consolidating and then making its way back higher. Okay. Now, no telling whatever news comes with the stock, analyst downgrade, or it's just trending down. But this is a great buy for a company that has a bright future. Okay, so whether if you're an investor, then grabbing you 2 to 3 or maybe even 5 stocks, I'm sure you'd be very thankful for it in the future with strong fundamentals that back this company. All right. But for me, just looking for maybe a $50 to $100 increase in price, which I believe my buying, let's see, purchase price for me, I believe is $358. Okay, so it's $20 to have 10 shares. So I'll be looking for this to reverse trend, and come on back up, and I'll sell it around maybe 450 or 500 if we get back there. So doing plays like this, I don't mind holding on to it for 2, 3, 4, 6 months, or even a year. Okay, so it's a great company. A lot of people use it. I use it at work, so I do believe in their company and what they're doing. Okay, so this is Zoom. Let me see. Here. All right, next stock is PDD. Pinduo. Excuse me if I'm jacking up the name, but yes, next stock that is a great pullback opportunity. I actually put on 2 puts in this stock at, what is that? At the 160 strike price. Okay. I actually put this trade on for next week. It has clearly held here at the 21, and buyers came in and bought it up, man. They fiercely bought it up. You had a little bit of selling here at the top, but this candle is green because the buyers came in, bought it up when they seen the buyback opportunity, the pullback opportunity. Okay. So with this stock, if you want to trade this stock, you can do what I do, or did what I did. And I came in here, and when I actually sold these puts, the 2 puts at 160, this was about 400 and about maybe 5 cents or $410. So 4.10, somewhere around there. But I sold 2 here at the 160 strike price. So I got in at a pretty good deal. So about $800 of credit, and this expires next week, the 22nd. Okay. Or if you still want to play this stock, you can come here, do a credit spread, see what it gives us. Go ahead and put in 1 strike. 64 cents. Max profit, 64 cents. Max loss, $186. Okay. So you like me, I like the 5-point spreads, 5 or 10. So you can come in here and receive a credit if you put on a 5-point spread for $1.18, which equates to $118. All right. Me, if I want to do something like this, I'll put on 3, press and see. Max profit $354 versus the max loss or max risk of $1,146. Okay. I believe when I put this on today, see how close I can get to it. When I put this on today, the margin required per put contract. Yep, that's about right. So I put about $2,200 in margin per contract. So it cost me about $4,400 to put on this trade. So the profit possibility of making $800 while investing $4,400 is a pretty good deal. Okay, so that's PDD. So let's just speed up here. Netflix, wonderful pullback opportunity. We have earnings here next week, actually. Excuse me, guys. Let me see. 19. Yes, it's next week, Tuesday. Okay, so this is pulled back and slammed into the 100 EMA. All right, so we're holding here at the 100 EMA, and what I want to look for tomorrow to see if this has continuation or if we consolidate. All right, so if this has continuation and comes down here to the 470, I'll pick up some shares. Okay, so I was thinking about picking up a Leap, but I'm sure these Netflix Leaps might cost around the area of $10,000. So I don't want to necessarily put on the sell put or put on a put credit spread until the stock shows me what it's going to do, because this right here is the fork in the road. So we can either break this 100 EMA and come down, or we can sit here. And if you see the small wick under here, a little bit of buying came in, but this candle is red because the seller's pushing it down, trying to short the stock in hopes of it coming down and breaking below this 100 EMA. All right, so I'll continue to watch this for the rest of the week into next week, and hoping to see that it like consolidates in here. And if it does just that, I might go ahead and buy some shares versus the leaps, because we do have earnings coming up. And one thing about earnings, you can buy a contract, and if Netflix had bad news and it drops down here, okay, well, your $9,000 to $10,000 contract is looking probably cut in half. But if I have about 10 to 20 shares, and it drops down here, what, maybe $20, about $400, $500. So it depends on what you can stomach. So I'll make the decision as Netflix trade for the rest of the week and see what I can get out of it. Okay. But if you realistically want to trade Netflix, I do a put credit spread. I do a put credit spread because it helps manages your risk. You don't have to put too much risk on to participate in Netflix. So let me show you guys. 471. This will probably be a longer dated out. Let me 11, 471. 475. 8 cents. That's not bad. Oh, $1.60. Okay. Well, if you get 10 contracts, that's what that'll look like. But one contract, max profit $160, max loss $340. Okay. And it's for next week. Remember, the volatility is high on Netflix. This is around 475. And you can participate. That to me is not a bad deal. I should have did it myself. Well, earnings is next week too. That's why it's so high. I actually may put that on myself, because if earnings does drop down here to 200, then it usually has a habit of bouncing a little bit below and slingshotting its way back up within the next 2 or 3 days after earnings. But that's not here or there. I don't know what'll happen in the market. Okay, so that's Netflix. All right, Twitter took a position in Twitter today. So Twitter came a gap down. I ended up getting in around the 45, I believe. I did 2 puts here at the 45. And you can do the same thing. You can play puts here, either at the 45, 46, or you can come out a little bit further and play the 42. We have earnings on the 9th, or you can play earnings. And one good thing about earnings is it may be a little bit too early to play it, but usually a week or two, I like playing earnings series puts, because that volatility would have swelled up. Okay. So if you come here, February 9th, see, take a look. February 9th is in this series. So if you come here, you could easily play here 42, maybe 45. Oh, wow, look at that. You play here 44 per contract, $2.33 or $233. Okay. Let's see how much. Like I said, hold on to control. Let's put one in there. So that is one. Bam, $537 of buying power. Don't get greedy. Buy 1 or 2. You want to keep it small. You want to keep it controlled. You want to keep it where your money is making money. Look, if you go ahead and play this series, this is 32 days out. If you play this series, it's going to cost you $537 of buying power. But I'm not going to do it now, because we have 5 weeks until earnings. Okay? Anything can happen. The stock can gap down. Just anything can happen. But if I do, I'll let you guys know. But this is a great deal. And then if you receive this money, that's almost 50%, $537. Can't get better than playing puts. Or you can come here and do a credit spread. I would do the 45 vertical. Look at the dollar in between. You gain 40 cents. You risk 60. You can't get better than that. Okay? And look at this. You put 10 on them all. Look at that. Max profit of 400. Max loss of 600. You only risking $600. If it works out for you, that's money in the bank. Man, I'm excited about that one. I'm gonna do something. I'm gonna let y'all know. Okay, so that's Chewy. But up here, man. Okay, Facebook, self-explanatory. Facebook here is not really offering me anything just yet. So now we are below 4 of the EMA moving averages, and we're about to test this 200. So I have to see what Facebook want to do. I have to see if we come down here, hit here, if we come back up. So now we're at the point where we have so much pressure against us to where we can hit up here and actually reject off and make our way down. Okay, so this is a pullback opportunity. If you want to invest in it or if you want to trade it, I recommend just buying shares as it drops every $5. And as you can see today, it dropped $10.73. Okay, so just average yourself in, pick up some shares, and give it maybe a couple weeks or maybe a few months to where it makes its way back up. Okay, so you have to be very patient with Facebook. And we do have earnings here on the 27th of this month, so maybe earnings can break Facebook out of this mini bearish type downtrend, but we'll see. Okay, so nothing yet at Facebook. And lastly, Google. Okay, so taking a look at Google here. Google, to me, is still in its bullish trend. We just moved up here, waved a little bit, came down, hit, come down, hit. So you see a pattern that starts to form. Come down to the 50, hit, consolidation, go back up, top out, come back down, hit, come back up. So we're looking at this pattern. My assumption is Google may pull back down below 1723, which is the 50. Okay, so for this week, if this happens, what I'll do is probably take a position down here around 1660. Okay, and Google, I don't do naked puts on because it's just a massive stop. I mean, when you get a $41.54 move in one day, yeah, that's not the type of activity you want when it comes to selling puts. Even though you could come out about 45 days and try to come out here, but it still costs you a pretty penny of buying power to put on this trade if you want to naked. So we want a controlled risk environment, all right? So I'll play down here, 1660, and see what the odds give me. You see here we have the 1st of February, we have earnings. So I don't want to be in this earnings series, but I'll see what it can give us. Okay, now we're in Google's option chain here. So I mentioned 1660. Come here, credit spread. Here, sell vertical. Put one on. We will receive $1.10 of credit. So that makes it a 10-point spread. Okay. That's not what I want. We can get a better deal than that. Let's actually go up one, because if we go up one, it has the 5-point spreads, 1665 and 1660. Let's come here, sell vertical, 10, go 1, 2. All right. So max profit 65 cents, max loss $435. I don't like that one either. Like I said, I always try to collect at least $1, to give like a decent amount of risk here, especially on the 5-point spreads. Now on that 10.1, you're risking 800, risking 8 to make 1 basically. So almost 9 to make 1. But let's play around with the numbers. And this is for next week, January 22nd. Sell here to 1680. Come here. 5-point spread, 80 cent, a little bit better. Max profit 80 cent, max loss $420. That's why with these bigger trades, February 1st is the earnings series. Now here, let's try 1660 again in this series. Well, these are $10 wide, $10 wide. Let's come to the $5. All right. So there we go. That looks much better. So you can make a max profit of $110 while risking $390. All right. So depends on your risk tolerance level. 1665 is along the lines of, right here, close to the 100 EMA moving average. So 1665 puts you well out of danger in case the stock drops below the 50 EMA, comes back here around $1,700, which is a nice hold number. It's what people like to buy up stocks. So it protects you, gives you a little bit of comfort, but it could break it or it could hit it, consolidate again, and then make its way back up. Okay. So those are my stock pullback recommendations. I hope you guys like the video. Sorry for the length of the video. I'll make it more concentrated next time, maybe just 2 or 3 stocks, but I'm still getting my feet wet with this thing as far as like my video planning. But other than that, please like, subscribe, share. I hope you learned something. I'll be stepping up my video making in the future as far as like my knowledge that I have to spread to you guys, man. And such a fun journey, man. I get 100 people that are subscribers, man. That'll make me so happy. You know what I'm saying? You gotta always stay humble, man. And I just feel that I need to help people and teach people and understand that you can make money in the market. Just get you a free financial education. Other than that, y'all be easy out there. Let's make this money. Peace.